Hello students, I think you have been enjoying my lectures and you have been following my discussions regularly. See, today we brought a new chapter under Income Tax Act, that is profits and gains of business or profession. So this is an important chapter under your Income Tax Act because entire business community and professions also is covered and guided under this section. See, what are those profits and gains? Any business organizations, be it a proprietorship organizations, partnership organizations, or company forms of organizations, everybody is doing business. They are earning incomes and gains. For that, they are liable to pay tax on their incomes. Similarly, which are those professions? Professions be it in medical professions, be it in engineering consultancy professions, be it in legal professions, lawyers, advocates, be it in the area of your finance and accounts professions as chartered accountants, cost accountants, and company secretarships. Those who are doing their professional work, you remember it. Any professional people who is either in job or in profession, you see that if he is in service, so it will not cover under here. If he did his business under his name, then only it will be charged under the head of profession, just like a lawyer, just a doctor, and engineer in consultancy firms they do have. Then only it will be chargeable under the head profits and gains of business or professions. You see, the basics of the calculations of income from or profits and gains of business or profession is that you being a professional or you being the owner of a business or the accountant of an organization, you are calculating the profits as per the norms of the act. Sometimes what you are doing, you are taking some income which are not applicable under this particular head, or some of the expenditure you have taken into consideration which has not been considered here. Mainly profits type are these things basically considered here, which are you are either taken or not taken. Whether it is applicable or not applicable, accordingly you have to add or deduct. Sometimes what happen, you have not taken certain expenditures for which you have to add back. See, you have not taken some expenditure, you have taken some expenditure which are not claimed or allowable under this section. You are to deduct those expenditure. Ultimately, you are adding back to your profit. So these are the things. So now we will be going, what are the ways we will be discussing under this head, that is whether business or profession income is taxable under section 28. So that is the first criteria, whether that particular business or profession income is taxable under section 28. So that taxability you have to identify first from section 28. Now we will be going for your computation of business or profession income under these different heads. So first starting point, whatever way you have calculated, you have to start with that profit as per your profit and loss account. Whether right or wrong, as per your calculations, you have taken into consideration. Now we have to go step by step. Whatever you have calculated, that income tax department will not take it. As we told you, some of the expenditures you might not have claimed but allowable as deductions, you are to deduct those expenditures. You see, those are the things you have to deduct those expenditures. So we have to go one by one this way. So ultimately you have to remodify your profit as per the rules of the Income Tax Act. See, your books of account one profit doesn't mean that it will be same for the income tax purpose. So now you start with your net profit as per profit and loss account. From there, you have to deduct those expenditures which are not claimed but allowable as deduction under section 30 to 37. You see that section 30 to 37 explains certain expenditures which you have not claimed or which you have not debited in your books of accounts, but it is allowable as deduction. That means for that your profit become more. So once is these allowable expenditures you will charge, then definitely your profit will reduce. Which are those heads? You see the rent, rates, taxes, repairs and insurance of building. These are the general expenditures. In general, we are allowing expenditures all those cases: rent, rates, taxes, repairs and insurance of building. This is under section 30. You have to remember the section wise. 30 to 37, you understand that the expenditures which you have not claimed as deductions, but those are allowable deductions. So under section 30, rent, rates, taxes and repairs and insurance of building, if you do not claim as deductions, but you can claim as deductions, excluding capital expenditure. Suppose if you any capital expenditure is incurred, that is excluded under the deduction part. Similarly, repairs and maintenance of machinery, plant and furniture, this is also deductible expenditure under section 31. Repairs and insurance of machinery, plant and furniture, these fixed assets only, these repairs and insurance, this is deductible under section 31. But here also you remember that only revenue expenditures you are eligible for deduction, no capital expenditure is allowable here. Next coming very important part, that is depreciation. This is also deductible under section 32. Here condition is that assets should be owned by the assessee. Assessee means which will be chargeable to tax, that particular person, that is assessee. So this should be owned by him. That means if you are rented place, if you do not own any furniture, you cannot claim as a deductions in such situation. But here one point is there: if you taken any asset on lease basis, you are entitled to claim as deductions. So this is under section 32. See, as you are doing no 30 to 37, we have to go. Next is our coming is tea, coffee, rubber development account. So some expenditures you might have spent for that. What is those section? Section 33AB, that is growing and manufacturing of tea, deposit in a special account and deposit into NABARD. NABARD, you know, National Agricultural Bank, Rural Development Purpose, that is the NABARD. So this is also eligible for deductions if you have spent on any development purpose, coffee, rubber development. This is under 33AB. Then site restoration fund, that is also eligible for deduction under section 33ABA. What purpose you have to spend those expenditure? Extraction, production of petroleum products, or that should have been the expenditure for extraction and production of petroleum products. Then another condition is there, that scheme must be approved by Ministry of Petroleum and Natural Gas. You cannot do your own amount of deposit on such is restricted to 20% of profit. So this is your under section 33A. Now we will be going, some other things are there that we will be discussing one by one, because this head 30 to 37 is a very big head. From here onwards we will be going for that. So we have gone up to 33ABA. Next onwards we will be deducting, because here this deductions portion is the more areas than your add back portions. Okay, so next, this is the point is there, your next expenditure is coming, your expenditure on scientific research. Important head, scientific research. This is covered under section 35. So here condition what they have given, revenue expenditure only, revenue expenditure incurred by an assessee who himself carries on scientific research. Suppose a scientist who is an assessee and who himself carries on scientific research, and condition is that after March 1973 it is applicable. And which period it will be applicable? It will be applicable within 3 years immediately preceding the commencement of the business. You see, here condition is there. Scientific research, that deduction expenditure will be applicable. Here only revenue expenditure. You remember it. No capital expenditure is allowed as deduction. And condition is that who himself carries on the scientific research. That means any scientist who himself is doing the scientific research. And condition, within 3 years, immediately preceding the commencement of the business, that time only you will be eligible for deductions under this expenditure on scientific research. This is under section 35. So you see that here one condition is there, you yourself being an assessee, you are making an expenditure. Alternative is there, another expenditure is there, contribution to outside. Section 35 subsection 1 Roman 2 and 3. What is it, these things? Here assessee doesn't carry research himself, but he contributes for some outside agency for that contribution purpose. Here earlier section, that is statute section 35, that scientist himself carries these things, and this is the condition 3 years. But here you being an organizations, business organizations, you are contributing some outside persons, those who are doing some particular work. What does those work? That is where you are contributing in approved scientific association, association. Whatever amount you are contributing, 100% you are getting exemptions as an expenditure. Number 1. Number 2, an approved university or college. Here, if you any amount contributing for scientific research only, scientific research. So, if you further scientific research, any approved university or college, if you are contributing, that 100% is eligible for exemptions from the year assessment year 2021-22 onwards, right? Number 3 options they have given for an approved university / college for research on social sciences. See, here directly scientific research, here social sciences. Social sciences includes your law, accounting professions and your management professions or statistical research. See, these all social sciences are not physical science or direct science, but those are social sciences like any arts, commerce, or your management course, or any other statistical organization's expenditure. They are also 100% of that your contributions will be eligible for deduction. So this is the part here. This covers under section 35 subsection 1 Roman 2 and 3, contribution to outside and direct contributions by the himself, scientific research carries himself, that is under section 35. So this part is over. Now we will be going, you remember these sections carefully. So this way, whenever your practical problem will come, you have to go one by one. Next your deductions point comes. This is the way, carry out rural development. Suppose for rural development, for any expenditure you are carrying, you are spending any amount, it will be eligible for deduction under section 35 CCA. You remember that section. Then objective must be very carefully understand. That is only for rural development purpose only that expenditure should have been. Next part is there, expenditure on agricultural extension project. Here if you spend, it will be also eligible for deductions under section 35 CCC. Here condition they have given on a notified agricultural extension project. So it might be some approved, that means any government notified extension project. If you spend amount, then under section 35 CCC it will be eligible for as an expenditure, or you can claim as an expenditure. Next point is your coming, that is your expenditure on skill development. You know that this skill development concept recently it is very much important. Skill development project. It is covered. Skill development project. Here you see that weighted expenditure, 150% of such expenditure. Suppose if you spend 100 rupees, you claim deduction 150 rupees. So weighted expenditure you will be getting for this thing. But here one thing you remember, that this skill development purpose or revenue expenditure only allowable exemptions. Cost of land and building. Suppose any expenditure on cost of land and building you are making, that is not eligible for deduction. Eligible for deduction, right? Now next point is coming. You read from your books, amortization of preliminary expenses. You know that your accounting terms, which are those preliminary expenses. This is under section 35D. You can claim that preliminary expenditure, amortization, these things. Here restriction is there, that expenditure cannot exceed 5% of the cost of the project. That means that amortization of preliminary expenses under section 35D you can claim as deduction, but it is restricted up to 5% of the project cost. Right? So up to that these expenditure, because these expenditure heads are more heads are there. So we have to go up to 37. Then another expenditure they are allowing, amortization of expenditure under VRS scheme. You know that VRS scheme means voluntary retirement scheme. Suppose voluntary retirement scheme purpose, any expenditure is being incurred by the organization, that is also deductible under section, you remember that 35 DDA 11 head you have to remember for these things. Here condition is that deductible in 5 successive years. Successive years in equal installments. You remember that? Suppose you 10 lakhs you spent 1 year, 5 successive years, 2 lakhs in each year. During the 5 successive years, you are eligible for deductions if any amount spent on VRS scheme purpose, voluntary retirement scheme purpose. Then next important point we are coming here, that is insurance premium. Here you remember that insurance premium to in general we have allowed as deduction, but this insurance premium here we are talking, this is under section 36. This particularly this insurance is for risk of damage or destruction of stock. You see that you are holding a stock in your business organization. To maintain those stocks should not be damaged or destruction. For that purpose you are taking insurance. So that is eligible under section 36. Next, another is there, insurance premium for health of employees. This is also important, because for your employees' health you are concerned more about that. This is under 36(1) subsection IB. So whatever your premium paid, you will be eligible for deduction here condition is that keep in force for the health of the employees and second condition is that no cash payment is allowed. Premium must be paid by check. That means bank transaction is required. So insurance premium for health of the employees under section 36(1) subsection IB, it will be eligible. Keep in force for the health of the employees, and the condition is that premium must be paid by check, that is through bank transaction. No cash transaction is allowed here. Okay, so this is the point has come. Now we are going for another deduction, that is bonus or commission to employees. This is under section 36(1) and Roman 2. Here condition is that not payable as profit or dividend. You remember that. If you that bonus or commission, if you paid as a part of profit or dividend, then it is not deductible under section 36(1). Okay, so bonus or commission. Then point is coming your interest on borrowed capital. So this is also eligible for deductions, which head under this is 36(1) and Roman 3. These sections, it is eligible for deductions, but here condition is that till the asset is put to use is not allowed as an expenditure. You understand that suppose you have taken interest on borrowed capital, but that asset should be completed and put to use only, then only will be these things intermediate process. Whatever interest you are giving, you cannot claim as deductions. Now next one important point is there, employers' contributions to provident fund. Very important that you know that all employers, as per rule, equal amount, whatever you are deducting from your employees, same amount you are to contribute that provident fund. This is also deductible under section 36(1) IB. So employers' contribution to provident fund, here no restriction is there. Next point is coming, employers' contribution to NPS. What is the full form? National Pension Scheme. This is under 36(1) subsection IBA. Here one condition is that it is restricted to 10% of salary. So you understand that what is the meaning of salary? That means basic plus DA, it will be the salary for this purpose. So up to that, these are the expenditures are there. Now another 2 expenditures will be there under that head, NPS. Next expenditure is there, contribution to approved gratuity fund. Any contribution in the approved gratuity fund is eligible for deduction. This is under 36(1)(5). So it is eligible. Next important deduction, that is bad debt. You see that bad debt means that is the debtors which you could not recover, ultimately you are to debit to your profit and loss account. It will be you have to allow for this thing. So this is 36, 1 and 7. So here condition is there, date arises due in computing income in earlier years. You see that you date matlab debtors corresponding to sales you have taken earlier years. Definitely it is the part of income. Only those incomes against that any date that will be allowable as deductions under that bad debt. No other things will be taken into consideration. Here one more thing is that advertisement expenditure. This is also important because business frequently that advertisement expenditure is required. So this is under section 37 2B. So here this is the, you see that we have to go up to 37. I think this will be the last deduction. Here condition is that no deduction is in any souvenir published by any political organizations. Suppose any political organization published any souvenir, in such place if you advertise any of your company this thing, you will not be eligible for deductions under this section. Last but not the least, whatever we have explained up to 30 to 36, whatever your expenditure considered, if any particular thing not being covered under 30 to 36, those also eligible for deductions under section 37. Any specific expenditure which is not being discussed and covered under section 30 to 36, it will be covered under 37. So you understand that your calculations, you got it. Now we have to give, then whatever we have deductions part we have made it. Now we have to add. Add means those expenditures have been debited to P&L account, profit and loss account, are not allowable as deduction under section 40, 40A and 43B. So which are those things? Under section 40, it is your TDS default pertaining to any sum other than salary payable outside India or payable to non-resident. You understand the residential status, who is non-resident? So in such cases, this expenditure you have debited, but you will not be allowed, then you have to add back. This is one under section 40 TDS. Then your provident fund payment within tax deductions at source, that is another 40A4 provident fund payment. Tax deductions at source, that is also not eligible, you have to add it back. Then another point is your salary payable outside India. It is also 40A subsection 3. This is also not allowable for deduction. So This also you have to add back to your profit and loss account, which you have already earlier debited. Now point is there, provision of payment of gratuity under section 40A. You see that whenever you are making the provision, you have to clearly motive to understand that you will be making the payment of gratuity. But for mere provision doesn't mean exemptions under this head. So payment to be purpose of making the payment to the employee, if that gratuity you are making provision, that only will be allowable as deductions, otherwise you have to add it back. Then another we have told, no, 43B. 43B, that is here your this unpaid statutory liability under section 43B. So this is also your these things. What are those things? Books of accounts are to be maintained on mercantile basis. So this is the thing. Unpaid statutory liability under section 43B, you have to add it back if it is the books of accounts are maintained on mercantile basis. So these are the things of your in general of your profits and loss and business and professions. So whenever you will do practical problem, some more complication might be there, but that you have to deal separately. But here in simple, we can summarize this way. What are the formula for that? It is that your these calculations, first you have to find out the profit and loss account, that format, deduct those expenditure which are not claimed as deduction under section, these things. Then here you are to add, deduct these things, this is the minus, you have to add which are those things, as we have explained, no, those expenditures have been debited but are not allowable as deduction under section, as we have explained, no, 40, 40A and 43B. So this is some figure will come, and your this at last we have to give some other things, deduct minus those income which have been credited to P&L account but are not taxable under section 28, as you told. So definitely you have to less it because you have already inflated in your income or profit. Then add which are the items you have to add it, those income which are not credited to P&L account but are taxable. So that you have to add it. So that will be your profit and gain oblique profit and gain of business or profession. So you understand that in nutshell we can tell that you have to start with your own profit and loss account. Main head is your deduct those expenditure which are not claimed, you have not claimed, unnecessarily your profit being inflated, so you have to deduct that. After that you have to add back these things. You have charged certain expenditure which are not allowable, and finally you see that some of the income which you have taken into consideration as profit but which is not chargeable under section 28, you have to take it minus or reduce, and add some income which you have not credited to profit and loss account but taxable under section 28, you have to add it back, and finally what figure will come, that will be the profit and gain of business or profession as per Income Tax Act, as per Income Tax Act. So whatever profit finally now it will come, on that basis you have to pay tax. So again we are repeating, your own calculation of profit has no mean for income tax department. They will be recheck or scrutinize your profit and loss account. Accordingly you have to add back and finalize your profit and loss account, and based upon that your tax liability will be there. As you have been discussing that your income from salary, income from let out residential portions, income from profits and business, respective headwise you have to income, you have to calculate it. Your gross total income will come. From there certain deductions will be there. You have to calculate the taxable income, and finally as per the slab basic exemption limit that what are the tax bracket will be there, accordingly your tax liability will be there. So this is the part we are concluding here. I think little bit lengthy this chapter, but unless and until we conclude our total discussions at a time, then what will happen, there will not be continuity of my discussion. So once again I will request you, please do subscribe to my channel so that whatever new videos will come, it will be come to you directly or that the first. And another thing I will be requesting again, because as I have not been getting any comments from your site, please do give some time and send your comments, valuable comments, so that I will try to answer for those things, and any your visibility of my this thing, or if you think that my that manual system, that is class lecture 2, if you want the digital method, so I will be thinking for doing that upgradation of my system. So today we are concluding the video here. Have a good day.